Hey YouTube friends, welcome to the channel. I hope you and your investments are doing well. In this video, I'm going to take a look at 3 different companies that are going to help us do 2 things. 1, these are dividend investing companies, so they will help us grow some passive income. And 2, they are in the renewable energy space, so we will be investing in companies that will help secure a clean energy future for Canada, North America, and the world. So win-win. But for some introductions, my name is Steve. I am a dividend stock investor using Wealthsimple Trade to make all my purchases because it is a zero commission platform. So far, I've been doing pretty good. I started a year ago and I hit my $10,000 year-end goal. And I just want to give a quick shout out to all the other YouTubers I've seen who've hit their targets. Congratulations. This is great. I love sharing. I love reading and sharing our successes together. So really great to see that others in the community are just doing amazing. So congratulations. But let's get into the content. I hope I wasn't buttering you too much there to hit that like button. So the content is basically there are 3 different stocks that I am looking at to grow my investment portfolio. I only look at dividend paying companies because I'm trying to grow that dividend income. That's part of my overall investing strategy to grow some dividend income, reinvest those dividends, and just grow my portfolio faster. So that way it's a little bit more exponential growth. Like I mentioned in the introduction, all these companies are in the renewable energy space. And let's begin with AQN, Algonquin Power and Utilities Corp. Algonquin is a Canadian renewable energy and regulated utility conglomerate with assets across North America. So the utility part there means that they do deal with natural gas, which is a fossil fuel. So not a huge fan of that, but let's continue. They are a global leader in renewable energy through its portfolio of long-term contracted wind, solar, and hydroelectric generating facilities, owning, operating, and with interest in over 2.5 gigawatts of installed capacity. There's the snapshot for who Algonquin is. Now let's take a quick look at 3 different numbers that really matter to us as dividend stock investors. The first one being its current price, which is around $17.96 at the time of making this video. Their dividend yield currently is 4.86%. Their last payment, it was 21.8 cents a share. This is paid quarterly. And when you look at their dividend growth year over year, it keeps growing. So this is another important thing that we look for in dividend stock investing. We want to see the dividend growth year over year. So Algonquin checks that box. Over the last 52 weeks, the stock price has been as high as $22.67. That was almost exactly a year ago when the company was at a high in January. But like all the other renewable companies, they started a steep decline from January to February. To make matters worse for Algonquin, in mid-February, when that winter storm swept through Texas, a lot of renewable energy companies that were set up in that area kind of got a bit of a bad rap, got a bit of bad press, which I think put their stock price a little lower than the other ones had they not been in that area and not been mentioned repeatedly in the news. Or maybe that actually influenced a lot of the renewable energy companies getting a bit of a dive because of all the bad press. So shame on you, news organizations. The next stock we're looking at is TransAlta Renewables, ticker symbol RNW on the Toronto Stock Exchange. TransAlta develops, owns, and operates renewable power generation facilities. As of March 3rd, 2021, it owned and operated 23 wind facilities, 13 hydroelectric facilities, 7 natural gas generation facilities, 1 solar facility, and 1 natural gas pipeline, and 1 battery storage facility. Again, it seems that you can't quite only invest in renewable energy companies without some of the natural gas or some kind of fossil fuels being connected to them. Again, not a huge fan of that. But let's look at the overall dividend basics and compare that then to Algonquin. The current price is $17.08, which is very comparable to Algonquin. Their dividend yield right now is 5.5%, which is higher than Algonquin, and their last payment was 7.8 cents, which it's important to point out right now that this stock pays monthly. So then if you were to compare it at a quarterly rate, it is around 23 cents per share, which again is slightly higher than Algonquin. The dividend growth is not great. It has been the same since August 2017. So if you're looking for really steady dividend growth, it's not there, but obviously it's there for the monthly payments where you always get something going in. But it's nice when we can mix a bit of growth with the dividend income. So that's not good with TransAlta Renewables. The revenue and net income of TransAlta Renewables shows steady annual revenue. However, their net income keeps going down. So right now even if I were to compare the two, Algonquin kind of is more favorable to me than TransAlta, despite TransAlta having a slightly higher dividend yield. But let's not come to any conclusions quite yet, because we've got one more company to look at, which is Boralex, ticker symbol BLX. Boralex is a power company that develops, builds, and operates renewable energy power facilities in Canada, France, the United Kingdom, and the United States. In 2020, Boralex's total installed capacity reached 2,455 megawatts. When you look at Boralex's website, they list 4 different sources of their energy: wind, solar, hydroelectric, and thermal. Thermal, in case you're unaware, is also sometimes called biomass, where it is the burning of plant-based matter, primarily trees. Not a huge fan of the thermal producing power that Boralex is investing in. I know I'm probably being overly picky about these companies, because really, we're also interested in the dividends that this company is paying. So let's take a look at the basics that make up this company. The current price of Boralex is around $32.29 at the time of this video. Their current dividend yield is 2%. The dividend is paid out quarterly, and their last dividend payment was 16.5 cents per share. Its year-over-year dividend growth has not changed since 2018, so we're not seeing a lot of growth there. So now I take all this information about these companies and I use 2 different lenses to look at it. The one being from a dividend investing perspective. Which one is going to be the best fit for my portfolio to help me meet my investing goals? So that I'm looking at, what is the dividend yield? How is the dividend growth? But on the other hand, I'm also looking at it from an environmentalist perspective, and which one really fits the mold of the future that I want my children and grandchildren to live in. So when I look at just these 3 companies, Algonquin is the clear winner. Boralex a close second, but Algonquin has a good dividend yield. Even though TransAlta has a slightly higher one, it only ends up being a 2 cents difference per share. The dividend growth year over year is better with Algonquin. Year over year, it has grown versus the other 2, which have seemed to have stalled in the 2017 and 2018. And the energy mix is good. I think Boralex is maybe a little bit better, but Algonquin just kind of checks a lot more of the other boxes on the dividend investing side. After looking at the 3 different companies, Algonquin was the clear winner to me. That's why I decided to add that as the newest addition to my portfolio in 2022. I'm going to pick up 8 shares of that, and any money left over I'll put towards Enerject, because that's another renewable energy company that I own, as well as Brookfield Renewables. So those 3 together will make up my renewable energy pie in my portfolio, which I'm going to try and grow to be 25%. That's not financial advice. That's something that just I'm planning on doing. You might do something different, and that's the way it works. That's the way the game works, right? Let me know in the comments which of those 3 companies you would have picked, and tell me why. As well, I'm curious to know what other metrics you would have included in your analysis of those companies to help you make that decision. We'll end it there. I hope you are staying safe, Keep it in the green. We'll see you in the next video, and sayonara. See you later.